Trias has hit price projections as projected last month. You've asked for an update, so I'm going to give it to you because we want to look at what's happened and what's likely to happen next, because we do probabilities and never certainties. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Usually focused on currencies, but now exclusively on crypto. So let's dive straight in. So this was the last video we did on Trias, which was on September 17th. And we said, look, it looks like there's this correction happening, and we want to be really, really aware of it. This correction over here, I think it got a bit more extended, and then we should anticipate this next leg up. And now it's happened, like textbook. So let's just dive straight in. Look at this. This was the video we did down here. If I just scoot it over this way, you'll see it perfectly. This is where the video was last time, and we said we should anticipate this movement. But look how accurate that is, right? And it's nothing to do with me. It's just Elliott Wave and Fibonacci. It really allows us to read the markets, the psychology of what's likely to happen next with high probability. And more often than not, it unfolds close to what's anticipated. So if we just kind of flick back and forth, this is where it is today, as of 31st of October, 12 p.m., just after 12 p.m. UK time. And this is where it was on September, right? So you see the power of it. So if you want to learn how to do this yourself, you can take my free Elliott Wave and Fibonacci masterclass. It's in the link below. I've spent hours, hundreds of hours simplifying it so you can understand it in simple terms so you can apply it to your tokens. So now let's just get rid of this annotation. What we want to look at is what's likely to occur next, because with Trias, with the whole nature of the game, we don't know what's going to happen next, just what's highly probable, and we just have to look at the available information. So firstly, let's just look at the weekly indicator. So the weekly indicator in the top left is the fast line. The blue line is just approaching the overbought zone, so we're going to be aware of that. So it's like maybe sideways to up for 2 weeks, but we might get a fast reversal on the downside. So we're going to be aware of that. So the upside should be limited for a few weeks. But what's more important for us is this over here, right? Because what we said with Trias was the movement to the downside, and this lesson applies to all crypto. This is very aggressive to the downside. It's not like a typical correction. So what we said was we're not sure if this is going to be an A, B, C, or a 1, 2, 3 with a continuation to the upside. Now, because of the stage of the bull market, if we take that into consideration, I'm more leaning towards that. But I think we'll go into a correction. So correction now is what we're anticipating. So let's now just focus on this part of the market. Right, this part right here. Let me just zoom in like this. Right, because what we got here is this movement to the upside. You know, we want to change this to, it's a tough call. The call is, and it's just being objective. Rather than calling it a wave A, it's a 1 or A. Because the trouble is, when you are invested in the project, you have something called cognitive dissonance, meaning you want it to go up, so you'll see only the things that are going to tell you that it's going to go up. But you want to have an objective viewpoint, where here we're going to say it's a 2 or a wave B. Right here we can remove the question mark, because now we've had this movement to the upside. This high got taken out over here. So what this tells us is this wave 2 low is now confirmed down here. It was a bit further down. It was like a bit more of a complex correction, but that's just the nature of life when it comes to trading in crypto or any market really. But now we've reached this 1.618 of wave 1. This structure here looks like a wave 1, 2. I don't know. Let's just have a quick. Let me have a couple of. Let's have a quick look, because we want to get some clues. What's the clues? We want to look at the clues. 1.618. Bang. So 3, 4, 5. Yeah. So this in itself, like if we look back at the video, we said we should anticipate some type of 1, 2, 3, 4, 5 in this region, and it's unfolded that way. And it looks like, you know, being objective, keeping it mechanical, it looks like from here, or let's have a look at the price. 640. Yeah, so around here, almost looks like a 1, 2, 3, 4, 5 in itself of a 1. We got this wave, well, it looks like a wave 2, a nice wave 3, a wave 4, and it looks like a wave 5, right? So here, what we're doing, I'm taking my time with this, is even though we wrote B over here, I want to change this. It was a macro degree count that we're doing. Is this a wave B or because what you want to do is always assume you're wrong. So the point being here, the big lesson today, regardless of what happens, is if you're in Trias and you bought down here somewhere or down here somewhere, this is a nice movement to the upside. We're anticipating around $18. So it got as high as, if we go to a candlestick, where's the candlestick? There we go, candlestick. The high was, what's the high? Yeah, $20.85, almost $23, right? Almost $23. It's a really nice move up. So you want to be in a position, ideally, where you're risk-free. Somewhere around here, consider being risk-free. So if you're 3x up, 4x up, so down here when we spoke about Trias, a little while ago, we even spoke about it down here. The price was around $4, $5. So you should be 3, 4, 5x up, give or take. And even if you got in up here, even at this correction, it's still 3x up, 3x up. So when it comes to risk management, always assume you're wrong and that we could be in a correction. One of the probable outcomes, I'm not saying it was what I want, I'm neutral in this. I don't hold Trias, I'm just doing it because you asked me to do it, is one of the outcomes is this. So you don't want to give profits back to the market and you don't want to be in a loss, especially if you're in a good profit, especially in a good profit. So let's just look at two outcomes that are potential. Well, let's just look at the minimum. I'm just going to get rid of this because we don't need that right now. Even this, we don't really need this right now. Yeah, because of ABC. Yeah, we'll leave it here. We'll leave it here. What I want to just focus on is this part of the market here. What is the typical minimum movement to the downside? Keeping in mind that we've got a bearish daily reversal and the weekly is becoming overbought. Well, if this is a wave 3 or even a wave C, right, what we should anticipate is a 3-legged correction. It will typically be in the range of the previous wave 4, which is around down here. And is normally at least 38 to 52 and a maximum of 62% of the high to the low. So if we just take this low over here, bang, bam, and what we want is 32, 50, and 62. And you can see it's right in that range, right? It's right in that range. We always anticipate a minimum of 3 legs in the correction. This looks like the first. We'll probably get some type of second. And then some type of third. That's what's most common. Right? And then if this leg here, if it becomes overextended to the downside, then we know is more likely to be finishing off a correction. If it's a very clean ABC correction, and then we get this high taken out like this, then we can actually assume that we're just going to get a continuation of the trend. So you have to go, okay, either could happen, but what's the probabilities? So we need to get more information. So again, the momentum will probably go down, up, and then down. And at this point, where the price is will give us valuable information. So there you have it. Trias, it's really cool when it kind of pans out, right? And when we get this, I'm always anticipating 50 to 70% of the time. I think we're around 70% where it unfolds as anticipated. Crypto is great for Elliott Waves and Fibonacci. And if you haven't already, take my free Elliott Wave and Fibonacci masterclass. You also get some perks, as in if you join one of my courses or take one of my courses, I just simplify the whole thing. They're quite cheap at the moment, but you'll get invited to my private Telegram group where you'll get premier access to this kind of content. Just thinking, is there anything else that I want to cover with you? No, it's just unfolded textbook. I'm just doing this because a few of you have asked me to do an update on Trias because it hit the projected price target. But the main lesson for today is if you're in 3, 4, 5x profit or more, you should be risk-free. You should be risk-free or consider taking your original investment off the table. Doesn't matter if you absolutely love Trias or you're just totally speculating on the, from a technical standpoint or whatever it is. It's good to be risk-free. Protect yourself from the downside. It's just good business practice. So let's just see. Anything else? 1, 2, 3, 4, 5. Yep. We could do one last thing, actually. One last thing. We'll just do, just for the fun of it. This is a wave 5 projection that I'm going to do. And the typical maximum is this red line. And you can see it's tagged this part. So that just gives us an extra confluence of event that says, again, not guaranteed, but this high over here should be the high. Even though the weekly is still bullish, we'll probably get a bit of a pullback. And again, we want to be mindful that the biggest pullback that we've had to date is this one on this swing. So the pullback will be deeper and is probably already deeper and is more steep as well. So if it goes a bit lower, that's one of the first signals of a trend reversal. And we're either going to go into, either this is going to be a wave 1, 2, 3. Let me just draw it like this. A wave 1, 2, 3. And we're going to a wave 4. Or it is an A, B, C correction. And we get a continuation to finish off the correction before we go on to see the upside. And I know there's two outcomes there, but the reason why I encourage all my students to get risk-free at a 3x, 5x, at this kind of point over here, is because you have to accept the fact when it comes to any type of investing, it's all about probabilities, never certainties. So we have to protect ourselves from the downside. So there you have it. Trias, that's the update. You've asked for it. I've given it to you. What do you think is going to happen? Let me know in the comments below. Let's finish on a quote. It's really, really relevant. It's the one that I'm going to loop over and over again until this lesson drills into your brain. It is rule number 1 from Warren Buffett is never lose money. Rule number 2 is never forget rule number 1. So taking profits is a good thing. It's a healthy thing, whether you're totally for Trias or not. But if you're 3, 4, 5x up, 7, 8, 9, 10x up, which is 1,000% up, it's okay to take 10, 20% off the table, original money back in your pocket. So if the worst case scenario does unfold, keeping in mind that no matter how good fundamentally the project is, most of the markets, all markets, currency markets, commodity markets, financial markets, are mostly speculation, especially when it's less than 12 months, less than 6 months. Yeah, very, very important. Just the fundamentals gives people more confidence to buy, right? But it's buying and selling that drives the price action, and we always want to remember that. All right, like, subscribe, hit the bell notification, take my free Elliott Wave and Fibonacci masterclass, and I will see you soon.